I'm kind of like in James camp where it's super tempting. You see that deal, it's like, wow, a turnaround. Imagine we fix it up, we do it right. The market comes back, rates come down. This is going to be a
Grand slam.
grand slam. And
Yeah.
then you kind of, I'm all like you. I'm not super excited about the grand slam unless I can really get the warm and fuzzies and feel it. A big problem for us about the grand slam or these older deals that are effectively turnaround plays is, like Craig said, they're small. And so for a lot of these deals, they're below the size of deal we want to be acquiring, which is, around a $50 million deal. So that's a bummer for us because even if we thought the numbers looked good and that the deal priced well, it's just like, do we really want to roll up our sleeves and dedicate the next 2 years to this big turnaround to only be rewarded by X because the deal size was small and all that? And then similarly, another big problem that you have and we share is, okay, I might be super excited about the deal, but what about my investors, right? At the end of the day, like I mentioned, it's the tail wagging the dog. You got to make sure that you keep in mind who your customer is. And it's not ourselves, it's the investors. We need to do what is in their interests and what they get excited about. So yeah, that's my opinion on the situation. Everyone thought that distress was coming back in 2022 when rates started rising. And it may still be coming, but it's taken so long, and that long period of time has just stretched out the distress to where the market's been just managing it, absorbing it. Lenders have been extending and pretending. So I think there's been a lot of other more interesting things to be doing than kind of, I call it dumpster diving. But to Craig's point, it's probably on the way.
Yeah, I think that we're looking at it from an opportunistic standpoint, and I wouldn't have that be like a, you know, rooting for someone to fail. But what we're seeing is that inexperienced operators, they don't underwrite accurately, or even if they did, they didn't have the foresight to see interest rates climb the way that they did, or the cost of goods and services, and or, you know, a pullback on investor capital, or whatever it may be, or banks, trying to, there's this feeling that some banks are hoping that they fail because they're at a 3.8% rate, and they're hoping that they can, call on that loan and renegotiate it up to market, currency or whatever you want to call it.